Welcome back mga ka-investa. Today we'll tackle all about stops, particularly stop losses and the different kinds you can use. So again, stops are important and are crucial for trading. Going back to handling the risk to reward ratio for each trade, there are four usual outcomes for every trade. So there's a big win, a small win, a big loss, and a small loss. So when we trade, our first goal should always be to eliminate the chances of a big loss occurring. So most of the time, our losses should only be small and shouldn't greatly impact our portfolio. So this is where a stop loss comes in. It helps you mitigate your risks while still giving the trade some wiggle room for volatility. There are also different types of stop losses you can use. So there are percentage stops, market structure stops, time stops, and trailing stops. So let's go over each one. And first are percentage stops. So as the name suggests, you usually use a fixed percentage as your stop loss. So for example, if you plan on using an 8% stop consistently, then you would always put your stop loss 8% below your entry price. So although this would mean that sometimes you would be placing your stops above a support level if you use a fixed percent all the time, it's also possible that the decision could be based on your data or on your observation. So let's say you notice that for a certain group of cryptocurrencies, when prices see wild movements to the downside, even if it's still above support, so this could sometimes signal that momentum is dying. So then you can use percentage stops to get out of the trade faster. So for example, if you're again doing a breakout trade, you can use a stop at a percentage where you notice that the retest of the breakout level is already too deep. So this would be again dependent on what you observe and what your trading data tells you. So next are market structure stops. So this one is what we usually use. And for market structure stops, you place your stops at an area where the market's giving you a signal that demand is dying down. Usually, this would be at the breaks of support. So the most common area to place a stop loss would be at the break of the consolidation support. However, there's also a way to look for a stop loss closer to your entry area. So sometimes, during consolidations, mini consolidations or pockets form just before breakouts. You can use this as a way to place your stops at a higher level that's still grounded on market structure. Since you're reducing your risk, ultimately this could lead to better risk to reward ratios. And third are time stops. So this one is very straightforward, but the concept can be a bit difficult to grasp. So essentially, a time stop is when you sell after a certain amount of time. It could be 10 days, 20 days, or even 30 days. So how can something like this be effective since no one can know for sure when a cryptocurrency will start to move? So time stops usually are used whenever you're trying to trend follow or do momentum trades. So since the main idea for the trade is that demand is there and you're trying to catch a trend, prices stalling for too long indicate that either a longer form of accumulation is happening or worse, distribution might have already started. So for example, in most continuation patterns among strong cryptocurrencies, rarely will you see prices range for a long time after a breakout. And when prices do range for too long, this could be one of the first signs that the trend is reversing. So again, you need to observe the markets and figure out the usual timelines for each kind of trade you're making. And lastly, there are trailing stops. So this one's mainly for protecting your rewards when prices already moved in your favor. Usually, you'd want to put a trail stop after prices move higher. So sometimes our initial profit targets aren't hit because the market's volatile. Sometimes prices can reach just below the profit target and then reverse all the way downwards. So trailing stops ensure that our profits are still protected while also giving the trade enough room to wiggle around since yun nga, volatile yung markets. And the simplest method of using a trail stop would usually be using a moving average. So you just find an MA that fits your system or fits your trading setup, and you make sure that you sell your coins after prices break past the moving average, whether if it's breaking past the moving average intraday, or maybe closing below the moving average. So again, trading data comes into play here since It can help you figure out which MA length works best for you. And just remember that you shouldn't keep it too tight so that you don't choke your trade. Of course, you can also be creative with how you use your stops, and you can also mix them together. So for example, for this trade, I made use of a market stop and a time stomp. So just before the breakout of the high, a small pocket was formed, providing a market structure to use as a stop loss for the breakout. So I sold half on the resistance level, and then the other half was trailed on the 50-day EMA. So not exactly a big profit, but the point was I was able to protect myself from risks during the move. So may market stop ako just in case it ended in a small loss, and I also protected my profits since prices went back down below my original entry area. So again, be creative, but make sure as well that hindi mo siya in-overcomplicate. So just keep it short and simple. And yeah, that's pretty much it for today. So hope you all enjoyed the lesson. So see you again next time.
So that's it for today's lesson. Hopefully, you guys learned a lot. And for those who are just tuning in to our crypto trading bootcamp for the first time and would like to enroll, here's 3 easy steps so you can enroll for free. Step 1 is to create an Investagrams account. You will need an account on Investa to access the quizzes and our exclusive group. Step number 2 is to join our exclusive investor group on the platform. This is a place where you can ask questions directly to our educators and receive instructions for quizzes and activities. Step number 3, subscribe to our YouTube channel and follow our official Facebook page. All recorded videos of our lessons and important announcements will be posted on these channels.